please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
To trading hour, I am Reema Tendulkar. With me is Prashant Nair. For the markets holding up in the green, the benchmark indices are higher by close to about 1/3 of a percentage point. The up move has come through in the last 30 minutes or so. The gains are less when you compare it to the rest of the Asian market basket, where the Japanese markets are higher by close to about 1.5%, rallying for the second day in a row. Hang Seng is, putting in a bit of a rebound after the carnage that it saw at the start of the week. So the Hang Seng market too is showing you a gain of close to about 350 points, so at the high point of the day. So global markets, as you can see on your screen, are fairly upbeat. For the Indian markets, it's in the green, but compared to the sell-off that it saw at the start of the week, the gains are quite muted. Focus will continue to be on the rupee as well as crude prices, though compared to yesterday's levels, the picture is a lot more benign, at least on those two factors today.
It's calmer rather,
yeah.
Reema. So I think that is the good news. But let's see, I mean, is there more headlines on trade, etc., which are going to hit the screen? We do not know at this stage. But there's been enough already this week to kind of deal with. And that's the reason why I'm saying, relatively speaking, compared to the last few days, this is a much better screen to look at. Dollar is it's not really a big, it's not showing a big advance. I mean, actually, if you look at the dollar movement through the course of this week, it moved higher against emerging market currencies, but against G10 currencies, I mean, actually, it was lower. Usually, it does go in one direction across the board, maybe a little less against advanced currencies and a little more against emerging market currencies, but it was actually opposite this week. But today we are seeing the dollar on a bit of a retreat. As Reema pointed out, there's a bounce in Asia. So look at Shanghai, look at what's happening as far as the Japanese market is concerned. I mean, actually, the Nikkei is about 400 points away from its 2018 high. So, that could happen. Bank of Japan, nothing, absolutely in line. The big question, the big one to watch out, in my view, is the US 10-year yield. That is inching higher, trading higher. There are three factors, basically, I think. One is, of course, very strong data, which continues to come in from the US. Expect a hawkish kind of a Fed. 2 hikes are already there, priced in. And the third is just technicals. So I think, so will US yields revisit the 2018 high? That is not 2.12, it's 3.12. So we'll change that graphic. So 3.12 is the 2018 high. And it looks like at this point that maybe we will take those levels out at some point in time. And that has got implications for all kinds of asset markets. Maybe the single most closely watched financial indicator in the world. I mean, not just now, but pretty much all the time. But when it moves, it gets into more focus. So that's basically where we stand and find ourselves at. But let's bring in and get some views. Reema, Sudarshan is with us.
Yes, absolutely. Sudarshan Sukhani of S2Analytics.com joins in for a technical check, as always, at 11 a.m. Good morning, Sudarshan. Thanks so much for joining in again. Your thoughts on the day so far? It's been a calm morning of trade. Do you expect that this pullback rally could extend itself? And how would you approach trade right now?
Yeah, good morning, Reema and Prashant. We have been trying to buy this dip. Yesterday, we thought 11,400 holds, we'll buy. So that level did not come, so there was no buying. Today, that level has come down, but we are still buyers. 11,300 in the cash Nifty is the support level. That's a strong support zone. That zone is holding for now, so traders should be long in the Nifty and long in the Nifty Bank. And remember, Nifty Bank can see volatility because there is a weekly options expiry today, but that doesn't matter. The important point is, for the Nifty, your stops are 11,250 in the cash index. Stay long, and if the market closes cheerful, take the risk and carry the positions even if there is a holiday tomorrow. So the view is support is holding. We want to go long now.
What would you do in terms of trade, Sudarshan?
Well, it's primarily buying large caps, mid caps, and blue chips. So the first buy is TCS. TCS has been in a small consolidation for many days. Remember, the market was falling, but TCS was consolidating. That breakout should be imminent on the upside now, and Nasdaq has been very cheerful overnight. Then we have Britannia from the FMCG pack. Britannia is an outperformer. Same story. It was consolidating when the markets were falling. So stocks that do not fall actually go up much more once the markets become cheerful. So Britannia is my second buy, and the third is Sun Pharma from my favorite pharma sector. It's all buying in blue chips.
Okay, pharma as we speak actually seeing a bit of profit taking. So Lupin is off from the morning high, so that's down close to about 2%. Sun Pharma in the green, but again off a tad bit. Thanks Sudarshan for joining in. Let's go over now to Yogesh Mehta of Motilal Oswal to get in a few F&O trades. Yogesh, morning. Your approach to trade?
Yeah, morning. Since markets are holding on to 11,250 and 200 seems to be a strong support level, but on the higher side 11,330 and 11,330 is a crucial level to watch out. If it crosses that level, then we can see the extension of this rally, of the pullback rally, and that might be possible only and only after 11,330 on the spot basis. On the stock front, we are on the metal side, we are recommending on the Tata Steel. Current price is 629, 630 in the future segment. Keeping a stop loss of 617, target could be in the range of 656 to 658 range. The other one is BPCL in the oil marketing company. So far, these stocks were totally laggard. Now, day for yesterday, it has given a strong breakout. Yesterday was some cooling off on the retracement. Keeping a stop loss of 353, target could be in the range of 385 to 390 level. This is a positional call, can be looked at 5 to 7 days perspective. And on the short side, Autopac seems to be on a profit booking way, and Ashok Leyland is the one which has broken out 200-day moving average. Currently it is quoting at 127.5 level in the future segment, keeping a small stop loss of 130. Target could be in the range of 122 to 123 levels.
Yogesh, thanks very much. Appreciate you joining in, and thanks for joining us today this morning. Okay, I mean, if you can see, I saw some oil marketing stocks bouncing around. So IOC, HP, BP, they all got crushed and they're bouncing. Two reasons for that. One, of course, is the fact that price hikes are continuing, much to the agony of consumers at the pump. And second is the government, states are starting to cut VAT, which basically means that the center doesn't have to do very much, directly or indirectly. It doesn't, for example, have to cap what OMCs can charge consumers and then refund OMCs later. So that kind of action may not be needed. So that could be the implication. But some of the largest sort of oil-consuming states and the states which have got the highest rates of sales tax, VAT on fuel, on petrol and diesel, are yet to cut VAT rates. Maharashtra is the case in point where it's 90 rupees a litre for petrol. Will these states cut VAT rates from here on? That's the question. State Bank of India research actually put out an interesting note which looked at this very question. What is the scope for states to cut VAT rates? Dr. Soumyakanti Ghosh is joining us essentially on that particular report. Dr. Ghosh, thank you very much. Appreciate you joining in. You basically say that the rupee depreciation and crude oil price rise brings a big windfall for state governments. Could you just put some numbers to it? Explain that a little bit.
See, what we have done is that the states actually doesn't give out the collections from the petrol and diesel separately. So what we have done is that we have looked at the consumption for each of the states for the last fiscal year. We have looked into the VAT rates of the states, and on the top of that we are assuming that the consumption stays at the same level this year. So whatever increase in revenue is accruing to the states this year is solely because of the increase in the exchange rate and or of the crude prices. So therefore, for each of the state we have done this exercise and have found out what is the increase in the total revenue accruing to each of the states purely because of the depreciation in the exchange rate in the current fiscal, and this number comes to around 22,700 crores.
Dr. Ghosh, can you give us, in a way, some shortcuts? I mean, a $1 rise in crude oil prices benefits states on an aggregate basis by how much? I think you looked at 19 large states for this exercise. Also, a 1% rupee depreciation will mean what kind of gain to states?
We have that number. See, $1 increase in the states is actually resulting in a revenue gain of 1,513 crores for 19 major states of India. And please note that this gain is actually over and above the budgeted fiscal deficit for the current fiscal. So that means that this in the long term if we are assuming that the exchange rate stays at 72 and crude stays closer to 75, this gain will actually over and above the budgeted fiscal deficit. So that means the consolidated fiscal deficit, other things remaining unchanged, could actually push down the deficit by 15 to 20 basis points purely because of this increase in the oil prices and or a rupee depreciation.
Okay. Mr. Ghosh, good morning. Have you measured the impact on other macros? For instance, do you expect the states to use the revenue surplus to spend on capex? And if yes, how will that impact growth?
See, the problem with the states is that a lot of the states are actually revenue surplus states. But even after being a revenue surplus states, a lot of the states are actually having a fiscal deficit, because a large part of this surplus is actually going for expenditure schemes like, which are unproductive, like debt waiver schemes, and also for the matter, Maharashtra actually has the highest, as you know, the VAT rate, and Maharashtra actually is gaining the most from this petrol and diesel prices hike. So, but keeping that matter aside, I think even the revenue surplus states are unable to pass on any possible benefits in this oil because of the oil price hike, purely because of the fact that their capital expenditure, they need to spend a lot of money on this infrastructure creation, and they don't have proper source of revenue because the states are still in a structural changes mode because of the GST being implemented. So I think on a net basis, there is an element of gain because of the current oil prices rally and the rupee depreciating, but I am not sure, given the state's fiscal constraint, how much that could be passed on to the consumer, because at the end of the day, most of this revenue are going to make the revenue expenditure and other sorts of expenditure and the popular schemes which the states are currently running.
Okay. How about the impact on inflation if more states cut VAT? So far, it's only been Karnataka which has cut the VAT. Your own estimate of how rupee depreciation and crude price will impact the CPI?
See, on the overall inflation, I think there could be some other states cutting it. At the end of the day, I think as there are estimates in the public domain, which says that for every 1%, there are RBI estimates which says that every the 5% depreciation, I think, leads to around 20 basis point impact on the headline CPI inflation number. So at the end of the day, I think if the depreciation continues and the crude prices continues to slide down, I think there has been recently some pullback from the levels of 80, because 80 is always a threshold level because of the US sale factor. But I still believe that there will be some impact on inflation in the long term if the rupee continues to stay at this elevated level.
There's some disappointment for the sugar stocks in today's trade. The expectation was that the sugar export subsidy will be decided at the cabinet meet, but that decision has been deferred for now, and the stocks are now reacting with a downward bias. Manisha Gupta is here to talk about that, as well as what else is happening in the commodity universe. Hi, Manisha.
Thank you so much for that. Well, I guess we have seen sugar stocks react to the fact that the theme or the discussion did not come up in the cabinet today. The markets were anticipating that after ethanol has been worked upon, the next thing perhaps would be the export subsidy, and the markets really were looking at a much higher subsidy, because in the current season it's just about 55 rupees per quintal, and 55 rupees, and the expectation was at 140 rupees is what the industry was really working with. Clearly that hasn't happened, and we have seen a bit of a dampener or a bit of a disappointment come in for that sector. But it is expected to have been deferred, can come up later again, and the markets also are anticipating that with the festival season coming in, you will also see the sugar minimum sale price perhaps being upped as well. So plenty is expected in sugar, perhaps has been deferred or delayed right now. But let's get in a better sense from Abhinash Verma, who's DG ISMA, and he joins us on a phone line right now. Abhinash, hi, thank you so much for joining us. The sugar export subsidy, the markets were anticipating would be cleared today, hasn't come for a discussion also. What is your sense? Do you see it coming in anytime soon? How are you looking at the way the events have played out?
Thank you, Manisha. I mean, if you ask ISMA, then ISMA would say it should have come in the month of August itself. So we feel that slightly delayed because we wanted to form contracts, we wanted to finalize some export contracts, and then give orders to the sugar mills to make raw sugar We believe that in Maharashtra, they should be starting the season from the beginning of October. And in North India also, they should be starting by middle of October. Therefore, we need to firm up some contracts very soon and give orders to the sugar mills to make raw sugar. I would seriously believe that the government would like to do it as fast as possible.
Avinash, how much of an impact would it make with what the industry is working with right now has come in from one of the ministry officials itself in sense of number, the export subsidy on cane and on transport as well. How do those numbers look to you? And if they actually go through anytime soon, do you see industry be able to make good use of that then?
What I read in the newspapers, I can only interpret that and tell you that the government is looking at giving a production subsidy on the sugar cane, which means some kind of a payment directly to the farmers as part of the FRP, which would reduce our burden to that extent. So if that is done, then obviously our losses come down. Secondly, for the first time, I'm seeing some news saying that the government would be giving us internal transport charges and handling charges for the sugar from our mill gate to the port. So if these two combined, if we calculate and say, okay, fine, then the government is looking at subsidizing a part of our losses, then probably a lot of sugar mills will come forward to export sugar. First of all, we need to know that we will be having too much of sugar for which we do not have storage capacity in the country. We don't want our inventories to block more and more working capital and block our funds, and we don't want to land up in unpaid cane price areas of the farmers. And therefore, we, as it is, would be looking to export sugar. And if some assistance comes from the government as part of the FRP or as internal transport charges, it is certainly welcome, and a lot of us would come forward to export sugar. What is important to see is whether the government will make the export orders compulsory, mandatory, with power to seize or not.
Avinash, that really was my next question, because, for this season, government had made it mandatory to export 2 million tons. We understand only 5 lakh tons of that really has been contracted. And this season, perhaps it was 5 million tons. With the kind of backlog that the industry already is working with, how delayed or how late are we in any case in sense of these subsidies?
I don't think we are very delayed. We would have loved to see this export plan announcement about a month back. I don't think we are very delayed. We can firm up contracts within a week's time and then give orders to the sugar mills to make raw sugar. I don't think we are delayed.
Okay. One more thing that Equities has been doing rounds is the CCI imposing penalty of 38 crores on 18 mills and associations as well, ISMA being one of that. What do you have to say on that?
The order has come up yesterday evening. We would like to read it, understand it, and then react.
What kind of a setback it would really be, though, because, it is about ethanol pricing. We heard it just about a week back, and the industry has been rejoicing that the markets do believe that the kind of sell-off that we saw in sugar stocks yesterday perhaps was because of this as well. So
this order will not have any setback as far as ethanol program or ethanol pricing or a future ethanol program is concerned. This is related to a specific tender of 2013, and that too also relates to only specific sugar mills. There is a lot of issues which need to be sorted out before we think what to do further. But I can assure you and tell you this will not have any impact whatsoever for future ethanol contracts. Number one, because the prices are now fixed. In 2013, there used to be a tendered price, and that is what CCI is questioning. But now it is not going to make any impact or difference to the future plans of the ethanol program.
3 points on the Nifty, so not really going anywhere at this stage. Let's get you some market opinion. We spoke with Pankaj Tibrewal, Senior Vice President and Equity Fund Manager at Kotak Mutual Fund, who he says that macro headwinds continue to impact markets and essentially is the top hurdle at this point for markets. Listen.
There is a tug-of-war going between the macro concerns and the micro improvement. And clearly at the moment, macro concerns are taking an upper hand. Clearly, if you look at our view over the next 6 to 8 months, we believe markets are likely to be volatile, led by the macro headwinds. and the election, which probably would start somewhere from November, December on the state side and going up to the general election in 2019. At the best, markets could consolidate at these levels, and henceforth we believe that there is a merit to be cautious on overall markets. We believe that valuations have become far more reasonable than what it was 7-8 months back. It's very difficult to get the bottom in every stock. So we believe that over the next 6 to 8 months, the correction in the market should be used to own good quality mid-cap companies. Opportunities have started to emerge on a bottom-up basis selectively, and we believe that over the next 6-8 months, if we build a great portfolio of good quality companies at the right price, I think over the next 2-3 years it could reap benefits for most of the investors.
Okay, let's get in a few trading ideas. Ashwini Gujral joins in now. Ashwini, pretty steady for the markets. Your thoughts?
Well, we are not declining to that extent. It's steady. But today there is a marginal improvement in our macros. Rupee is stronger. Bond yields are lower. So my sense is that, possibly going into the end of the day, the HDFC twins could recover a bit. A lot of other large banks are already positive. So I would buy the bank nifty here and hope that we get a rally going into the close, because there isn't great amount of pressure at 11,280, 300. So that way, the market seems poised for a bit of a rally. Asia also is doing well. So just a little excuse to kind of show you a pullback. 11,400 thereabout seems to be that area where Nifty can go, and maybe some more upside, 26,700 odd on the bank Nifty. So that way, right now is a good time, and the rally should pick up in the second half, because market confidence is so low that it takes a while to get a rally started. Having said that, Dish TV is a sell with a stop of 64, target of 58. HDFC Bank is a buy with a stop of 1965, target of 2000. And JSW Steel is a buy with a stop of 410, target of 430.
It's recent highs, so yeah, I mean, it's a good-looking bar. Steel generally, Ashwini, is bouncing back, right? I mean, they're all sold off, but then one of the strongest bounce backs today.
Well, I guess overnight the Chinese response wasn't a whole lot, and hence globally you are getting a rally in these metal type stocks.
What is the deal with Z, you think, Ashwini? It's down another 1.9%.
That's tough to say, but it's clearly in a bear market. Now, these things, what starts to get priced in, whether it's alternative media, etc., because the 200-day moving average is now 560. It's almost 100 points lower. So not only Z, even Sun, even Dish TV. So probably some kind of a media move as a sector. But overall, most sectors are going down. I think these guys are probably underperforming the rest of the market also.